What if crypto just jumped from niche to mainstream in a single day? Here is what happened in the past 24 hours. The United States Securities and Exchange Commission approved spot exchange traded funds for XRP, Solana, and Dogecoin. On launch day, the Dogecoin and XRP funds together traded about $54.7 million. In the first hour, the Dogecoin fund traded about $6 million. That shows strong demand from both regular people and big firms. Bitcoin had a wild ride too, after the Bank of Japan began unwinding some exchange traded fund risk, and after swings in global markets, the price of Bitcoin fell near $116,000. Just weeks ago in mid August, Bitcoin touched a new all time high near $124,496. Bitcoin's market share also slipped. It fell from about 60% at the start of August to about 56.5% now. Money flows are shifting. United States spot Ethereum funds brought in around $4 billion in August. In that same time, Bitcoin funds saw about $639 million in net outflows. As a result, Ethereum's market share rose from about 11.7% to about 13.6%. That shows a rotation from Bitcoin into Ethereum and other coins. There is tech news too. Ethereum's Fusaka upgrade is planned for December. It follows the Denkin and Pectra upgrades from earlier this year. Fusaka aims to boost speed and lower costs. If it works well, it could bring more use and growth to apps built on Ethereum. Macro policy is also in play. The Federal Reserve cut interest rates by 25 basis points. Lower rates can push more money into risk assets like crypto. In stablecoins, the United States Treasury's new GENIUS Act is set to add more rules and oversight. Supporters say this could bring more safety and clear paths for everyday use. Critics worry it could slow open innovation. There are big moves from institutions and even government. Reports say the United States Strategic Bitcoin Reserve now holds between 120,000 and 170,000 Bitcoin. In Europe, Valor launched a Bitcoin staking exchange traded product on the London Stock Exchange with a stated yield of about 1.4% per year. In workplace saving, some 401k plans in the United States now allow small crypto allocations, which could bring more long term buyers. Traders are getting more careful too. On options platforms like Deribit, there is more demand for puts and other hedges. That is a sign of a maturing market, where pros try to manage downside risk instead of just hoping for green candles. So, what does this all mean? First, crypto is getting more institutional. Spot funds for XRP, Solana, and Dogecoin give people a simple way to buy without learning private keys or wallets. More products can mean more liquidity, tighter spreads, and steadier prices. Second, the rotation story is real. When money leaves Bitcoin funds and enters Ethereum and other coins, it can lift those prices and lower Bitcoin's share. But rotations can reverse fast, so do not chase without a plan. Third, regulation is picking up. The GENIUS Act may help make stablecoins safer for payments. State ideas like a Michigan bill to hold 10% of reserves in Bitcoin show growing public interest. Still, rules can raise costs for builders, and new limits could slow some kinds of projects. Fourth, innovation keeps coming. A staking fund with a stated yield sounds nice, but remember, yields can change, and there are risks like custody risk, counterparty risk, and tracking error. Always read the prospectus. Make sure you understand fees and how the product earns any yield. Here is what to watch next. Will week two volumes for the new altcoin fund stay strong or fade? Do net inflows into Ethereum keep beating Bitcoin? Does Bitcoin regain market share if global markets calm down? Will the Fusaka upgrade ship on time in December? How will the next Federal Reserve meeting guide rates? And when will the stablecoin rules turn into clear guidance for companies? If you are investing, keep it simple. Set a budget. Diversify. Consider dollar cost averaging. Use secure custody, hedge if you understand options, and never invest money you cannot afford to lose. Crypto can move fast in both directions. Whether you are excited or cautious, this week shows one thing clearly. Crypto is moving from early adopters toward everyday finance. The tools are easier, the rules are clearer, the players are bigger, the stakes are higher. Hit follow to stay up to date.